As promised last week, we've made some changes to how we're tracking the coronavirus. We've shifted from total cases to active cases. After 2 consecutive weeks of total cases slowing, we now want to focus on how well we as individual countries and as a globe are moving towards some form of control or eradication. As you can see there, the UK, the US and Australia, which are the 3 countries where most viewers are from, are having mixed results. The UK and the US indeed are tracking fairly closely on a diagrammatic form to what's happening globally, where the number of active cases continues to increase. It continues to move up the S-bend. Australia seems to be having some success with flattening the curve, and indeed that's its 2nd consecutive week of decline in live active cases. Now, if that trend were to continue in Australia, and that's a big if, we could very well find that the island country is coronavirus free within 6 to 8 weeks. Big if, I wouldn't want to buy into that, but those are the lead indicators that are really going to give us an idea of when economies will reopen and what we can be doing as business owners to make sure that we're ready for those to reopen. In terms of the stock markets, it was another fairly flat week. So even though there's some ups and downs charted there, again, it was fairly flat. The bump, what I've been calling the dead cat bounce off the back of the stimulus packages across the world, seems to have subsided. That growth hasn't continued, and similarly, we haven't regressed at this point. To be honest, talking to business owners in Australia where I'm living and also in the UK and North America where I have clients, the speed with which those stimulus packages are actually ending up in people's pockets is a concern. And so I think there's a lot of waiting going on from both the markets and many business owners to see whether or not they have the desired effect of stimulating the economy and supporting jobs. Speaking of jobs, unemployment rate, the change there we have this week is that Australia's March figures have come out at 5.2% unemployment, an increase of 0.1%, similar to the US we talked about last week. That just doesn't cover the whole March period and encompass everything from the coronavirus situation. The US new jobless claims, remember this was a statistic that as of a month ago had never gone above 600,000 new jobless claims in a week. It's now had its 4th consecutive week of enormous levels. It has slowed. It went 3.3 million, 6.8 million, 6.6, 5.2. That's more than 20 million Americans that we know of who have lost their job in the last month. The speed of that hasn't been reflected in any previous recession. It has been somewhat reflected in the stock markets, and it's that speed that we're going to talk about when we talk about today when this recession will end, because it's a very, very telling lead indicator of what's going to happen ongoing. However, those headline official figures, and we do still wait on the UK the week after next, they're really still not capturing all of the story. And of course, the March quarter GDP, which we expect to be significantly down across the UK, the US, Australia, and indeed most economies. We will get that information in another 2 to 3 weeks on average. So we don't yet have that indication. Company profits and company forecasts are starting to come out. Reporting season, particularly in the US, has started. So far, again, they're not fully reflecting the coronavirus situation, except in their guesstimates of what's going to happen in June. So the March quarter is going to be bad. However, it's not going to necessarily show all of the lingering issues that are going on with the economy. And so far, the June quarter is only best guess, some of which is a little bit optimistic.